Good afternoon, everybody. Should be live in YouTube and live in the virtual trading floor. Last time I was on YouTube on this computer, I had the wrong microphone plugged in. I got some negative feedback on the sound. Hopefully, it's better this time because I think I got the right one in. Still not my best computer setup, though. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. The only update is I got back into AMD short. I'm smaller than I was. It's a smaller little position. Traded it really well during the day today. Welcome, Scott Corbett. Welcome to the virtual trading floor. Everybody, give him a round of applause and a welcome. What you got here for me? Reporters, including myself, have been called into the Oval Office unexpectedly. Trump is making a major announcement on the economy. I assume it's going to be on those 401ks. There's no reaction, obviously, to the stock market on that 401k news. If anything, we traded up when it came out. But I view that as I don't know if it's a good thing or a bad thing overall. You're giving people more freedom, I think, with how they choose to invest in their retirement account, um, which could be a good thing or it could be a bad thing because sometimes you need to save people from themselves. So time will tell on that one. But the read through on that, I would think it's bullish for crypto, bearish for stocks because now, most money in people's 401ks, I mean, we know that that's just a very big consistent bid into the stock market. Is anyone who has a job with a 401k, they have at least a percentage of that going into stocks every single month, no matter what. And now maybe a percentage of that money that was going into stocks is going to go somewhere else, private equity, crypto, real estate. So it should be really good for crypto. I would see it as not good for stocks, but no immediate impact. We'll see. There's been a lot of chatter. Now I'm starting to get off topic. There's been a lot of chatter over the years about how the stock market of modern day is able to trade at like a consistently higher PE multiple than the more traditional stock market if you go back to, pre, I don't know, 1990s. And there's a bunch of good reasons behind that. I think one of the best reasons is quite simply that the nature of the stock market, the stocks that comprise it are much different now than they were in like the 70s or the 80s, where it's much less about these like heavy industry companies and much more about these lighter tech companies that command a higher multiple. But I also think it is the ubiquitous nature of retirement accounts in this day and age that did not exist 40, 50 years ago, and just kind of the constant bid that's always there that helps to prop up the multiples a little bit. But we'll see. We'll see over time what happens there, and we'll also see what Trump has to say. All right, so let's dive in now into the meat of today's price action. So we are continuing to trade higher here after hours. We just got back down to flat. We actually closed a little bit negative on the day. We had a tremendous rally into the close in the last 30 minutes, particularly really in the last like five. So tremendous rally into the close, took us off of our lows, improved the daily chart candle, and continuing to trade up a little bit here after hours has us at unchanged in the SPY. Qs are now up 0.5%. I think the Qs closed positive on the day, and now they're up even more after hours, up about 0.5%. The IWM is also trading 50 cents or so higher here after hours, but still is a little bit negative. The Russell was really gross today. The RSP was really gross today. Though I guess not terrible actually. As I'm looking at it on a percentage basis, kind of closing a little bit flat, down small. But whatever. We'll look at the 5-minute charts here in a second. TLT down small. Um, The dollar down small and back below 27.50. That's good for stocks. Bitcoin. Interesting that Bitcoin's not trading even higher after hours. Bitcoin up 2% on the day. Really, really strong into the close. All right. Let's take a look at the chart. So I'm going to start with the daily chart, then I'll circle back to the 5. We said in the morning meeting today that today was kind of a really important trading session as far as the technicals go. We had a large gap up this morning after a strong day yesterday. Yesterday's strong close was notable. Yesterday was Wednesday because it got us above Tuesday's high. On Tuesday, we opened at highs and closed on lows, and the question was, is this the lower high after this roughly 640 all-time high that we had Thursday a week ago? Yesterday, we got the answer to that off of the strength of Apple and the semiconductors, not the semiconductors, really more Apple, that we were able to get right above Tuesday's high, and all of a sudden the market was looking a lot more bullish, and Tuesday was clearly not the lower high that market participants have been looking for. Then we had a large gap up today, which was kind of continuation from yesterday's close, but also just based on Tim Apple with Donald Trump at the White House after hours yesterday. And basically, the read through on that is we are going to carve out tariff exemptions for the largest companies in the United States, is at least how the market seems to be interpreting that. Apple, the semiconductor companies, yeah, we're putting 100% tariffs on semiconductors unless you are going to say loudly that you're willing to donate, or not donate, but invest hundreds of billions of dollars into the United States. Whether or not they actually have to follow through with that, there's no guarantees there. There's nothing in writing, but they have, said that they're gonna give it the old college try and try to do some investment into the United States. So they can get tariff exemptions, but obviously, if you're running a mom and pop shop and you need to import things, you can't really do that in the same way. But anyway, really big gap up based off of that this morning, and it left a big question mark, right? Are we going to gap and go off of this strength? And semiconductors were trading great this morning, which, my whole bear thesis, if anyone remembers from 2 days ago, was, and I admitted in yesterday's afternoon meeting, I couldn't have been more wrong. I was like, if AMD doesn't trade well on its earnings report, maybe we can trade down some of the AI names which have been propping up the stock market. And then we actually had the AMD weakness yesterday, yet the market was able to close on highs because they just rotated elsewhere, namely Apple. And then today we're back to semiconductor strength. I mean, AMD actually traded great. AMD was up 6%. AMD's up 6% right now on the day. Really, really incredible snapback on that. Look at this daily chart here for AMD, all the way back up. So, big gap up in the stock market today, and there's still a chance that we could get a lower high in the market. Or do we gap and go, break the opening high, and start retesting 640, and we're back into full-on bull mode? So what we discussed for today's game plan was look for the opening short, but then pay attention to the opening high, right? So I love big gaps. I love big gaps. It's one of my favorite things about being an equity trader. It's one of the things I am not looking forward to if the market really becomes 24/6 and is trading with a lot of volume. But really big gap up this morning. And what does that do? It creates a lot of opening upside extension on that 5-minute chart. That extension needs to be satisfied. Even if the market's going to move higher, yeah, you could get momentum in the beginning of the day that squeezes us up, but generally speaking, once that momentum fades, you need the ADMA to catch up to price action to get continuation to the upside. So whenever we have these really big gaps, you almost always hear me say the same thing, which is, especially if it's what we call a common gap. It's a little bit different if it's a type of gap that we call a breakaway gap, which is basically a breakout which occurs via a gap. Today's gap was a common gap, by the way. Common gaps tend to have a higher probability of getting filled. Doesn't necessarily have to happen 100% of the time, But basically, what we said in the morning meeting today, whenever we have these really big gaps, we say, let's see how the market handles the upside extension that's coming from the gap. And given that the gap up was large and it was still beneath SPY like 640, the high from last Thursday, I said, let's look for the opening short and then see what happens. So right away, the market rips higher, inside bar on the second bar. The third bar gives a little bit of a tail. And I don't remember, I was looking at a stock. It might have been the leaders. I think I was probably looking at like NVIDIA. And I saw this tail coming in NVIDIA at the same time as the market started to pull back a little bit. And to me, that was a signal where I said, all right, there's the pivot high that we're looking for. Look to short versus the high that's coming in right now for the market. So if anybody took that in real time, we called out the high of the day, and that's fantastic. But the question again is, what happens? Do we just get a little technical healthy pullback to equilibrium, create a pivot low, and then make new highs? Or do we get a pullback to equilibrium that then eventually leads to a failure? I don't know the answer to that, obviously, as the market is presenting itself, but it is extremely important, the answer to that, because the answer to that question is going to dictate what the daily chart looks like. If we pull back to the ADMA, create a pivot low, and then make new highs, then it looks like we're going to be in full bull market and we're going to make new all-time highs. If we pull back and then give a failure, a gap fill, maybe even go red on the day, then you still have the shot. You still got the chance of the lower high or just broader chop, which has been my primary thesis. Or I know Bill K was chatting a little bit today about the potential of more like a grind lower, a little bit of a stair step down with the market as opposed to momentum down for the market. I think that could be a real possibility for August as well. And the bottom line is the Bears did what they needed to do. We got the attempt of the bounce off the ADMA, and we said here, hey guys, let's book some profit here. We're approaching the ADMA. We got the attempt of the bounce. We got the lower high. That led to a lower low. It got us through the equilibrium zone on the 5-minute. Eventually led to a gap fill. They tried to roughly support the gap fill area. That failed as well. And we just continued to trend down here. But it was once again a little bit of a tale of two markets. If you were looking at Palantir and NVIDIA and AMD and Micron and the Qs versus looking at almost anything else, it was two very different looking markets. Compare the Qs in the beginning of the day versus the IWM or the RSP. The Qs were actually making that new high that I was so fearful of for bears, right? We had our opening high. We called out this pivot high perfectly. We had a little bit of a pullback. We get this pivot low. This pullback, by the way, was relatively shallow. It didn't even go into the ADMA on the 5-minute chart that shows you the relative strength in the Qs compared to the SPYs, which we just looked at. That was a little bit closer to the ADMA or the IWM, which you can look at in a second, but just blasted right through it. You got the pivot low here, the ADMA catches, and then we're making new highs. So the SPYs give that kind of lower high failure. The Qs actually make a new high, and it's like, oh man, which market do I believe? Which market do I believe? Do I read the IWM and the RSP that represents your more average stock, or do I believe the Qs that is more your NVIDIA and your Palantir and those names? Well, I guess the answer to that probably depends on what you're personally trading, what stocks you're personally involved in. But the Q's great relative strength. But then you look at the IWM, you look at the Dow, look at the RSP, and this was just absolute and utter destruction. Absolute and utter destruction. We gapped up in this IWM. We traded down to the ADMA. Within the confines of this bar, they briefly attempted to defend it, but they closed it on lows. We continued down. They tried to bounce it off the 21 EMA. That failed within 5 minutes. New lows. They tried to hold the gap fill. That failed after 2 minutes. New lows. You couldn't get a bounce in this IWM for anything. Look at the difference. Look at the difference between the Qs at 10 a.m. versus where the IWM was at 10 a.m. or even shortly thereafter. Just a completely different looking market. RSP, same deal. They attempted to bounce off that ADMA on the 5-minute. Total failure. The Dow was also really gross today. The Caterpillar was getting slammed lower. It was Huh. It was destruction pretty much everywhere except for the Qs. And Rock said it best. It's like, were these market participants here when AMD happened yesterday? Because it certainly doesn't look like it. AMD was able to fill the gap from the earnings day. Just yesterday, we were trading AMD, and granted, we actually called out the low in AMD really perfectly intraday. It was a great little hammer candlestick to buy off of. But if you were watching AMD trade down here initially, this thing could not find a buyer. It could not catch a balance. It couldn't even touch the ADMA on the 5-minute chart. And then eventually you got that hammer candlestick that led to kind of a intraday V bottom a little bit. And then today it was gap up and continuation from AMD. I guess Micron gapped up huge, but wasn't immediate continuation. SMH was great all day. NVIDIA was super strong in the beginning of the day. It was Palantir and semiconductors versus the rest of the world again. And even now, I think when you look at these daily charts, and eventually we lost the cues, right? Everything you look at actually had nice downtrends until into the close. We had a little bit of a reversal higher into the close. I would say that reversal higher into the close is more than I would want to see if you're trying to be a bear. But when you look at the daily charts of the indexes, it's a little bit of a mixed message after today. If you want today to be the lower high in the spies or the cues, you wanted us to kind of close at or at least somewhat near lows. This is like 50% of the candles the tail and 50% of the candles is the body. It's a little bit tricky to read. It's not the real confirmation of weakness and a lower high that's going to lead to downside follow through tomorrow that I would really want to see from the spies. The Qs, honestly, the tail here is more than the body. This almost looks bullish to me. But the IWM, I guess it's up a little bit after hours. The IWM looks a little bit more damning. It looks a little bit more, again, up a little bit after hours, but a little bit less of a tail, a little bit of a heavier of a candle. And if you look at the intraday price action, obviously there was a ton of weakness there. So, it all circles back to the same thought processes here. We're in August. August is seasonally a little bit of a weaker month, especially the first 2 weeks, and then it tends to resume a little bit of strength. I think I've been saying it. I think that the highest probability situation for this market is chop, and that chop can be frustrating because inherently, if we're going sideways, if there's chop, there are going to be things that are acting really strong and things that are acting really weak. And it's going to always seem like something is saving the market. Yesterday, Apple saved the market from AMD. Today, AMD saved the market from almost everything else except for other semiconductors and Nvidia and Apple and Palantir. So we'll see. Where do we get confirmation from? What are the important levels now? Today's high is important. The high from last Thursday, the all-time high, is really important. And then on the downside, I'm going to say that today's low, because we had a little bit of a tail, today's low is going to be pretty important for bears to get us back below tomorrow or early next week. And obviously still the low from Friday, which is our absolute low, that pullback. And then beneath that, you lose a big support level if you lose the S&P 6,200 level. So it's pretty much it from the index perspective. Today was such an important day from a technical analysis perspective, yet at the end of it, I almost feel like we have as many questions as we did coming into it. I don't feel like I've got great confirmation that, like, okay, they really failed us down. They sold the news this morning. We got the lower high in the market. I don't feel that way about it, but it's not like we made new all-time highs today either. It's not like we had that other circumstance that I was just describing where you get a little bit of a pullback, then they're breaking the opening high, and then they're going after 640. So we'll see. So that's at the index level. As far as individual stocks go, I think we had a few pretty good call outs during the day. AMD was certainly a focus again for me, even though I actually didn't really plan on trading this. I got all out of my AMD short yesterday, did really well with it. And then into this opening upside extension, I was pretty patient. I started really small. I think I shorted some initially above 171. I never got out of it because I was small, so I actually got heavier into this up move, made money into the down move, and I kept a real small position overnight. Palantir, we discussed in the morning meeting today with Palantir. I was like, It's a day 3. There's a lot of extension. You can look for the RDR. I kind of feel like it needs one more day to the point where in some ways, I almost would have wanted Palantir to close on highs, gap up again tomorrow. Then it's day 4, and then I'd have a little bit more confidence in the short. It closes as a doji, so it's a little bit more indecisive. But underneath the surface, I think there's a lot of strength still. If there wasn't, it would have closed at 180. It would have closed weaker, would have closed lower, and that didn't happen. So, we'll see. Palantir doesn't necessarily look like it's done to me, especially with that strong close. But we had a couple good intraday short call outs in this thing, as difficult as it was, and including really at the absolute highs here. I sized up into these absolute highs, made a chop into this little move lower, but with probably a little bit too greedy because the daily chart still has so much extension. NVIDIA is another really interesting daily chart today. It's obviously a major, major leader. NVIDIA was also looking like a real kind of gap up failure if you could have gotten a close beneath 180. If you close beneath 180, this thing was looking like a lower high on the daily, would not be looking good at all. Instead, we got to close above 180, so now it's another one that's a little bit of a doji. So it's the same thing. These really important stocks, at a certain point, it looked like maybe we were going to shoot the leaders today, shoot the generals, and that could have a big change to the indexes. But at the close, with the really strong rally that we had in like the last 20 minutes, especially with the Qs, I feel like I'm left with more questions than answers. A lot of indecision is what I'm seeing with this market. And honestly, I have to describe indecision as probably more bullish than bearish. But we'll see what tomorrow's price action holds. We'll see how we gap tomorrow, and we'll take it from there. And we'll just make note of our key levels. And if we're above the key levels, we'll be looking bullish. If we get below the key levels, we'll be looking bearish. And then you can position yourself based on that information to try to press the upside or press the downside. So that's all that I've got. I am happy to answer any questions that anybody has, like always. Not seeing too much here in the VTF. Derrick just said Jem said that also a couple months ago, that a couple weeks ago, I think, that if we go into corrective phase, it could be more grindy environment. Yeah, we could see a little bit of a stair stepper. Bill put some put flies on today. Cool. So just some commentary there, but no real questions. Let me check over on the YouTube. Apex Choice saying cloud software stocks sold really hard today. Yeah, CrowdStrike was crashed today, which is interesting because Datadog, I guess they sold Datadog down too. I thought that the Datadog earnings report was excellent. I actually had it on my long list today. So long for over 150. It never triggered above that 150 during the day. So no harm, no foul. But I actually thought that the Datadog's earnings report was excellent. So I was surprised that they sold Datadog down to red. They basically seemed to sell down this entire sector today. ZS got destroyed. Sentinel One, which is a name that I got out of above 20, is all the way back down to 1650. That name's been getting destroyed. They really crushed those names lower today. And they don't look bullish to me. This does not look like a dip that you want to buy at this point. These are like day ones to the downside. It circles back a little bit to what Josh was saying in the close, where it's like I feel like I'm looking at so many things recently that look poor, that look bad, yet a market that is never going down ever. There's always something that's defending it, and usually it's the same names. It's those same AI names. It's Palantir. It's NVIDIA. But yeah, a lot of things out there I don't think look good. From Kevin G. How do you feel about the Q's rhythm? I could see the down move, but trying to find a place to enter felt challenging, as if buyers were fighting it. Yeah. So it was very clear and obvious, I think, that from almost the absolute moment the market opened, that the Qs were where the relative strength was. So if you wanted to push for the down move, I don't think that the Qs were the right product to do that in. Semiconductors were just too strong. So, look at what's acting weak and try to short relative weakness. Billy D says it in the VTF all the time, and I don't do a good job of enough. I don't do a good enough of a job with this. And I don't remember which stocks he was talking about during the day today. Specifically, I think it might have been this CrowdStrike versus Palantir, and he was so correct on it. And he was like, why would I want to short Palantir when I could short CrowdStrike? And it's 100% the right thought process. Short the weakness, short what's trading lower. You have so much of a higher probability of getting follow through by shorting what is weak than by shorting what is strong. Even if, and I get it because this is what I do, you're looking at like that day 3, day 4 super extension and wanting to short, that at least makes sense. But if you're shorting like a day 1 breakout or something like that doesn't make sense. I think you either need that like more extreme extension to short, which is still a tough trade, or just short the weakness. It's really truly where the easier money is. So CrowdStrike, very relatively weak. The IWM, RSP, very relatively weak. Focus on that instead of trying to short Apple today or short Nvidia or AMD today, even though I shorted both of them with success. Palantir, which I also shorted with some success today. It's easier money to short weakness. From Cyril, today the EU session was strong. DAX performance, it ripped. Was wondering what it on news. I don't know. I'm not sure where that strength came from. I mean, we were really strong pre-market here, so it might have just been based off of follow through on U.S. futures and everything else that was going on. I really don't know. From Cyril, um, when in your opinion was a signal for the short in the Qs this versus the spies when the low of the day failed? Looking back, the Qs were orderly selling the channel. So my signal that I called out in the VTF in real time was off the third bar of the day for all the indexes, spies, Qs, and IWM. This was it. We said in the morning meeting today, our game plan in the morning meeting at the index level was short the gap up on the signal. And this was the upside tail signal that I was looking for. And I felt it was confirmed by this NVIDIA upside tail. Now, if you shorted NVIDIA versus that high, or you shorted the Qs versus that high, you got stopped out. And that goes back to what we were just saying about Cyril's commentary, shorting relative strength. So you got stopped out because you were shorting relative strength. It's just very hard. That's just very hard. And it's unfortunate. It kind of just is what it is. But it was still, I think that's the signal that I was looking for. And then from that point forward, I don't think that the Qs were the right thing to short because they were too relatively strong, and they were making me nervous to try to attempt to short lower highs on the 5 minute for even the SPY or the IWM. We've just been punished for months and months and months by trying to short downside continuation. So I've gotten very hesitant on shorting downside continuation. I've been more of like putting the short on and then not covering it all to try to get more out of what I have on as opposed to adding down, which I like adding down in the right market environment, but you need this market to actually show that it's breaking lower. Like maybe we go into stair step down, like we're like Bill K and Dennis were just chatting about in the VTF, more into a grind lower, almost similar to the grind higher. If that happens, though, you'll start to see downside follow through on 5 minute charts, and we can start to press that trade again. But I'm still very, very hesitant to press downside intraday. I liked the idea of the extension upside short with the signal. I liked the idea of having a game plan for that retracement into equilibrium eventually actually becoming a failure to get paid even more on it. But pushing the downside after that, I just think it's a very hard trade right now. Um, yeah, shorting strength is tough. Back over into the VTF. Is TTD still getting wrecked? I didn't look at the numbers. They took this thing to the woodshed. Down 28% right now. It's a big move for that kind of name. From Varun, I have some questions about Lilly, UNH, XLV, the healthcare sector. Does it ever become a buy? I remember when XLU imploded last year and you bought the bottom and sold and sold it too early. I did sell it too early. When was that? Was that just last year? Utilities were getting smoked. That was back in 23. This was like the one of the faster downside utility moves ever. I bought this dip big, and I was out by 60. I did well with it. Maybe I even got a little bit more than that, but yeah, they sold the hell out of it. Anyway, XLV. I mean, it's tough, man. It's really tough. I think it goes back to this exact same stuff that we've been talking about recently, and kind of what Josh was complaining about a little bit into the close, which is how this market is. And I might have been complaining a little bit during the day as well. Um, the names that are the bid is relentless. And look, in Nvidia, to some degree, it makes a lot of sense to me. I don't think that Nvidia is too expensive of a stock, all things considered. They are the number one stock. This name is the railroad tracks of AI, and it's this one company in particular. No one's even close to them except for maybe AMD. So, it makes sense to me. But some of these other names like Tesla's gonna look really strong again. Like maybe it breaks its wedge to the upside. These really expensive ones like Palantir. I've said it multiple times. I'll say it again. The Palantir earnings report was phenomenal, phenomenal. The growth in it was phenomenal. But does that growth, and as excellent as that growth was, does it justify the where's our? Let me see if I can get an update real quick on my other screen on the forward PE of Palantir here. Um, Does it justify a 218 forward PE, a 605 PE? Then on the flip side of that, you got some value that can't seem to poke its head up at all. Um, XLV right now, I feel like these healthcare names are like a deep value investor's dream with how they've been getting destroyed. But they can't seem to uptick for anything. It's like the complete and utter opposite. So you wonder. I don't know what changes that, Varun. I don't know what changes that. And I guess you circle back to the same old saying that a stock can remain irrational for longer than you can remain solvent. That's why you want to understand these things, and you can be skeptical of them. Like you could be skeptical of buying Palantir here. I think that's healthy. You could be skeptical of hoarding healthcare names here. I think that's very healthy, but it doesn't necessarily mean that they have to start going in the opposite direction tomorrow just because there's a lot of value in healthcare and Palantir is very expensive. It doesn't have to be that way at all. It's like these things just change when they decide to change. Isn't that like so often the message that we've seen that the market provides? Where, all of a sudden it just changes. And I'm almost looking for that right now in Nvidia and Palantir and AMD. I'm almost just looking for like the bottom just to kind of fall out on these names a little bit. And I'm really curious if that were to happen, does it mean that correlations just increase because the market's getting hit? Or I actually think that you see some rotation. And if you circle back to the idea of the market maybe going into like a step down pattern, like a grind lower pattern, which we don't really see happen very much, right? We have tended to see like these VIX squeezes that lead to market crashes that V bottom and not ever really grind downs. That like almost doesn't seem like it's even a thing anymore. But I think that the way that you see a grind lower at the index level in the S&P is because they finally stop running up the biggest market cap stocks that have been the leaders. They shoot the generals, but they do it in such a way where they take some of that money and they buy healthcare names with it, and other things that are maybe a little bit more of a value. So the indexes will go down because they're market cap weighted, and you're selling the biggest market cap weighted stocks. And maybe healthcare holds up, industrials hold up. Like a chart, I mentioned that chart that I saw, I think like a couple days ago. The market cap of the entire industrial sector, which includes, again, real companies like John Deere and Caterpillar, like very real companies that aren't necessarily like massively undervalued either, like healthcare names are. But the entire XLI is barely more expensive than Nvidia. I mean, it's just another crazy statistic, right? We got a lot of those in this environment. So that's kind of what I'm looking for. Like, I continue to look for the market to chop. It's still my number one expectation here for August. Maybe that chop turns into a grind lower. If it's a grind lower and not a crash lower, I think it's happening because you're seeing the biggest market cap stocks just not go up in the way that they have for months on end recently, with a little bit of rotation and other things. But because they're market weighted, then you see the SPYs grind down and the Qs grind down. So appreciate the question there, Mr. Varun. Yeah, SEZL Rect. Forget what this company does. Is this a buy now, pay later name also? It is, right? I always forget that this is one of those. Is this moving like a firm? No, a firm is a monster. Upstart. Upstart got really hurt. I don't really understand how a firm's holding in so well with compared to some of these other ones. SoFi was really strong again today, also, but still struggled a bit with that 22 resistance. Yeah, SEZL. All right. Anything new in the YouTube? From Apex Joy, is XLV weakness related to U.S. debt level causing effort to lower Medicare costs? It's definitely related to the Medicare cuts coming from the big beautiful bill, in my opinion. But it's still a really cheap sector fundamentally at this point. I don't, I've never really been a big trader of the healthcare stocks. It's not something I've really ever focused on in my entire career. Out of curiosity, what's the UNH multiple? UNH trades at a forward PE of 13 and a PE of $10.60. Oh man, that's funny when you go from looking at Palantir's numbers, Palantir's multiple compared to looking at United Healthcare's numbers back to back like that. Be next for Amazon. I don't know. Amazon's had a really good 2 day bounce back. I like the short on that. Um, I like the short on that into this move higher. Am I still in Tesla short? I am still in Tesla short, but I would not initiate a new short in this now. I liked the idea like 2 days ago or yesterday of shorting versus so in Tesla, the real pattern in Tesla is the giant wedge. There's a giant tightening pattern that's ongoing in Tesla. The question is, when does that break? You can actually see it, I think, better in the weekly chart than you can in the daily chart. So you got this massive build out of this wedge here. I would argue that the important pivot high and pivot low of that wedge right now are basically 338 on the upside and 298 on the downside. Um, that's what you really need to break. And technically, there could be, huge follow through on that. I don't know. If we just use, I mean, I guess really you're supposed to use this low to this high, which is kind of crazy. You might be able to tighten that up a little bit to the more immediate pattern. Let's go back to the daily. Let's be a little bit more reasonable on a price target on the break of the wedge. Let's use this high to this low. So we'll do like 272 to 267. Let's just round it to $100. So basically, what you can expect is based on traditional technical analysis, which is by no means perfect, that if Tesla can get above 338, it's probably going to 438. And if Tesla can get below 298, it's probably going to 198. That's what that pattern is telling us. Right now, it's in the midpoint of that pattern. So I tend to not like putting new trades on in consolidations. But what I was saying a couple days ago, which you would have got stopped out on, is I thought you could have tried to short versus these two highs here. So like Monday or Tuesday's high, right? Yesterday was Wednesday, yeah. Monday or Tuesday's high as a front run on the break of 298. Again, if you did that, we call that a cheat, right? When you cheat on the pattern, when you find a way to be able to enter a pattern to anticipate its break before it actually breaks. The benefit of doing that is if you're right, you get a much better risk reward. The downside of it is if the trade never even triggers, you will lose money in something that you never would have been in otherwise. This with Tesla here is that example. If you tried to short Tesla yesterday or 2 days ago versus the highs from the last couple of days, you got stopped out of that yesterday. You took a loss in a trade that technically never triggered. Had it worked, you would have gotten a phenomenally better risk reward. But now it's back into the midpoint of the pattern. So it's more like a coin toss again, technically here on which direction it breaks. And I would, if anything, I would actually argue that the last 2 days on this, it's shown relative strength and it's even more bullish. So whereas 2 days ago, I was feeling we had a higher probability of a break lower in that pattern. Now, honestly, if anything, it looks like there's a higher probability of a break higher in that pattern. Um, I am still short the stock. I've been short the stock for a while. I've done very well with Tesla short this year. Tesla short's one of my best names. My position in it is not huge either. So I'm going to continue to manage that and kind of see how it plays out. But yes, I am still short. I was thinking about this Tesla wedge. This shows you how much of a stock nerd I am. And it reminded me of the Baidu wedge, the famous Baidu wedge. And I bet that 98% of you don't even know what I'm talking about with the famous Baidu wedge. Here it is. Back in it was a multi-year pattern that built out from 2014 through 2017, basically. And I have a weekly chart up here, and you can just, I mean, just look at this pattern here. I'll zoom in. Let's do that so you get the breakout of it too. Look at this pattern. We were eyeing this pattern for so long, and there were some false breaks here. I remember this false break up. It got above this pivot high, and we thought, we're like, oh man, it's triggering, it's going. And it didn't immediately go. It gave a big pullback after that, and then it went. And then when it finally went, it went huge, which, is a multi-year triangle that built out from a huge triangle base. I think that a good way to measure it would be like 130 up to 217. So 70, uh, $90 or something like that. And then when the pattern actually broke out here, it broke out at like 190 and it went pretty much directly up to 275. So $85 of upside. That's pretty perfect. It's pretty perfect, actually. Um, is Tesla going to do the same thing? Is Tesla going to do the same thing? Break this wedge out to the upside and give you $100 run? It could, especially if the market continues to hold. Or is it going to break to the downside and some of these stocks come back to reality with their multiples? It could. Time will tell. It'll be interesting to see. Thanks for the question, Scott. Welcome to the team. VKTX is looking good. I don't have a position in it anymore. I'm out. And then classic fashion, it's continued higher from where I've got now, but it looks good. Real good day today on VKTX. All right. I'm going to wrap it up there. Have a wonderful night, everybody. I will see you all tomorrow.